All right, today is June 19th, 2024. We're currently looking at the E-mini S&P 500, and um, I want to talk about a trade from yesterday and sort of what's going on with price right now. So yesterday, my entry long was around sort of this area here on the higher time frame. On the left-hand side of my screen, we've got the 1 hour drawing, and on the right-hand side of my screen, I've got the 1 minute drawings. Um, Now, I was able to go long here to a break of structure and took 5R. Um, and I just wanted to talk about it because I haven't done a video in a while, and I think it's imperative to reiterate like the process over and over and over and over again. I think it's extremely important that we keep reiterating our processes and get comfortable with them. And so this is mine and how I do it. So typically, as price is initiating, and I see something like this, just literally just a liquidity grab, a draw from the liquidity below this low, I'm kind of left not knowing what's happening. Now, like I trade EU all the time, Euro US dollar, right? Well, Euro US dollar is not just in an uptrend like ES is, the E-mini S&P. Um, Instead, Euro dollar is sort of everywhere, from a higher time frame perspective, and so it's sort of a different ball game. Whereas this E-mini S&P 500 is making higher highs at the moment, and it's different in its characteristics. So, for instance, they'll like make a high here, and then they'll take that high, which is creating the sell primary. So for example, like let's say here we just created a sell primary. On EU, we would have taken liquidity from something over on the left hand side, right around here, and then gone up and over it to create the sell primary. Whereas here, they'll make a high, do something else, and then come and make that sell primary based off of the previous or current price action, I should say. So that's something new to me. I'm not sort of familiar with that. But anyway, let's get into the trade and talk about it and why, what's going on. So anyway, higher time frame, lick grab, and price is pushing up to a break of structure, right? So we can conclude that this will turn into liquidity at some point. It's not very a strong mitigation by any means, but price is initiating and initiating aggressively, strong and aggressive. So we can't ignore that. I can't just be like putting a dollar sign down here and then trying to short. This will get ran. There is absolutely no chance it won't. It's transitional. Everything about it is this is liquidity, is it? But it's for a future time frame, time point, and we just aren't privy to when. This price action here is indicative of a reversal because as we're sort of doing this, price is slowing, and it's indicative, not definite, but it's very indicative that all of this is going to get ran. All of this will get ran, and that's probably likely when they're going to come do that, and then maybe bounce from something more substantial. Okay, so that's what's happening right now. So I'm looking for continuation longs, and so as we get down into this area here, where my mouse is now, we can sort of start to see it on the lower time frame, and that's where we're going to sort of enlarge and talk about. Okay, so here's my entry over here, and I'm going to be quick with this because there's not really, it doesn't need to be much time spent on this, okay? If you don't get it, then learn it. But, I've done hundreds of videos now explaining my process, and so you can go back if you need to sort of understand them. But suffice it to say, liquidity up over this, above my line here. This comes and takes it and initiates away, breaking structure, right? So this is a sell primary, as we've ever seen one. It's actually this big as well, right? But the small version of it is right there. This was the part that did the damage. It took the liquidity right at the end. That's the part that did the damage, right? Whereas all of this is sell primary, but it doesn't really matter. Then it looks like just we're in a complex range. Someone would say that's a wick off range or blah, blah, blah. I don't really understand the Wyckoffs. I've never really gone into it, Wyckoff theory and whatnot. But this is definitely, I'm sure someone would state that these lows are absolutely perfect and the highs are and everything. So what I saw though was this. We created a buy primary right here. We had this range in here, initiate a break of structure there. It comes back in over the top and initiates away. So what that is, and I've written here, is the buy primary formed. Okay. Then, as the buy primary formed, I've labeled it nicely here. Buy primary formed, it initiates, and what does it do? Sell primary, which turns it into a transitional order block break. Okay. Now there is a gap. I'm just going to tell you right now between this line and the top of this one, there was a tiny little gap. You can see it on like a 15-second chart. It's just like a tick or two. So this goes transitional. So I color it differently, and I like to represent it like this. I like price to actually sort of head away. Now, as we've made our primary range, we've then initiated away. Okay, the first thing we're looking for is the initiation. We want that initiation. We want to see it and have it prove to us what's going on. Okay, and so we got that. We got this initiation. Now it's as soon as we've had that initiation, that confirmation that that's been mitigated. Now we've got confirmation and we're pushing away. It's the first leg as we're pushing away after this initiation that where we're going to get involved in. Okay, now it could have been just that high and then it returned to that 50% and entered there, right? Now I didn't now it did do that actually. From that initiation it did actually do that and make a concept right here from A to B. It came back to the 50% line, but there was no liquidity grab in that one, right? And so that's why I couldn't get involved. So instead, we wait, right? So we've had one initiation or one concept, comes back 50%, boom, perfect. And then the second one, which was much larger, 50% again. And now this is sort of my entry protocol, right? So now I've gotten, after the initiation, which was here, two primaries back to back, now I'm looking for that initiation away, which I get, and the last thing I'm looking for is that 50% return. Now I wasn't expecting a initiation. I would have taken it on a primary MS, right? But we got another initiation right in here. So it was beautiful. And as soon as that initiation has taken liquidity from below here, I'm extremely interested because I'm thinking to myself that there's very unlikely to come back to here. We've completed a concept. There's no need to come back to this area. And so as soon as liquidity is being taken from here, and I can see that we're actually creating the initiation, it was quite easy for me just to enter, getting my stop safe with a 9 pip stop in this one. I usually go for a 10 pip on futures, but or 10 point, I should say. Anyway, so I entered the moment I saw the rejection, liquidity's been taken, everything else, saw the rejection, and boom. Went for a 5R, literally just went for a break of structure up here, and that was my target. I wasn't looking to be greedy. Okay. Then price comes up, I get taken out, boom, perfectly, and then almost immediately it slams down here. Now, I was actually in the car driving at this point, but I did see this on my chart, and I was saying to myself, I would have entered here all the live long day because it didn't invalidate, by this pullback down here, didn't invalidate any of my setup. Still, we got the buy primary. Still, it went through the transitional order block, initiate. Then we had the initiation from down here, and boom, pushed up. So this pullback here was completely natural, normal, everything. And the fact it was so fast and its location was telling me everything I need to know. This is a manipulation pullback. They just wanted to take everyone who was long. They wanted to get them stopped out, right? Thankfully, I'd already taken my profits right at the correct place at the break of structure, and then they whipsawed back. But this would have been a great entry around here. It would have been a risky entry, but a great entry nonetheless. So that was my trade from yesterday. So what's going on today is a little bit different. So we've had a mitigation of something, right? It's actually just higher prices in this instance. And they've done the same thing again. They've created a sell primary shortly after the initiation. It's a lower time frame, but it's there. They then pull down and create a buy primary at the other end. So this looks like concept to me. Now, if we're gonna go long, we're gonna go long from what? Usually a buy primary. Now, this is the one I was sort of waiting for, right? If let's say we've created a sell primary here, this is the one I'd be expecting price to come through as the transitional. Instead, I found if we make this the lower sell primary and this the buy primary, right? We can actually see that we didn't break structure here, but we've got another buy primary in here. And that is what's happened. So we've got a sell primary that's taken out a buy primary. Okay, that has not happened on the flip side. Okay, we haven't had a buy primary put in that's taken out a sell primary. Here's the only sell primary up here. You see, so what's stacking, in my opinion, is shorts from here to push down. Where are we going to push down to? Probably just into this blue box before we have a reaction. Okay, next primary range. Makes sense. Primary range is whole price. So I've had my first event. Here's the timeline event. We've had the sell primary right there. We've had it break and become break the buy primary, which becomes a transitional order block. Beg pardon, drew it in the wrong location. It's right there, the purple one, right? Buy primary that turned into a transitional. They've then initiated price away. Now what we're looking for is for them to come back in and after a 50% return, right? Just like here, we had this initiation and we want to see ourselves come back straight into that buy primary, right? And so in this instance, we want to come straight back into that sell primary. And now we want to confirm it. And to confirm it, we're going to be looking at a liquidity grab. So I'm looking for price coming back into above the 50% line, which is here. And I want them to confirm it. I want to see something like an initiation, a liquidity grab. I need confirmation. And so expectation is a 50% return, and then we're going to do our entry via initiation or PMS. And what that entry would look like is something like this. Okay, so right now, if we just fall, that's fine. I'm not going to be taking anything. Okay, but if we do come up above liquidity here, or even above liquidity here, and do something, or create an initiation of sorts, like let's say we come up here just like that. Yep, we're in liquidated state. Come down here, liquidated state, and then one more time up there. That's my initiation, right? And then we'll pull prices down. It's that leg. Let me put that back on. It's that leg at this point here that I'll be looking for the 50%, right? So I'm looking for an initiation away, and I'm going to be seeing if I can get a 50% return with a liquidity grab. If I can get that, that's where I'll enter. Okay, so I'm not entering on this leg here. I might enter within that leg, but I need more to happen right now. I need to have them prove it, and to prove it, they're going to have to take liquidity, right? Something likely up here or here, and make concept. That's what this is about. This should become a concept. So let's see, what would a concept look like? Where is liquidity? I guess you could say the liquidity was here. Break of structure. So this whole thing, right, from A to B is the sell primary. And then we should have an equal opposite buy primary on this side. Looks about the same. Something like this. And as you can see, this was a buy primary. We had liquidity stacked here, liquidity stacked here. So this is definitely a primary. We've also got a range build that interacts with the median 50% line here. Here's that 50%. And you can see that this is the range that's interacting with the median. Okay. And typically when they do that, that's built for cause. And what I mean by cause is they're going to come up over the top of it. That's built for liquidity. Or if they're going to do it something different, they'll actually mitigate it. They'll actually touch in. Okay. So right now, as we see from this A down to this B leg, I can see that concept has been made. Right here, we're touching this primary range here. So we've got our primary touch. We've got a face card too. This is the lower time frame face card in here. I can see that as well. Even on this time frame, I can see that. So we've got HLFC with concept. So let's annotate that. Okay, so that's a good mitigation. The only thing we're missing is an initiation or a liquidity grab. And that's it. As soon as we get that liquidity grab, the initiation, whichever one, and then start moving and get away in that direction, we're going to be looking. We're then primed. We've then got an entry potential, and that's what I'll be looking for. So that's my process. That's what I'm going for. That's how I'm trading at the moment with the E-mini S&P 500, and you'll see the biggest takeaway from this video today should be this. I'll just draw it out. So as we create these primary ranges, right, that go over the top of these little sort of ranges, this one becomes the primary range. And then what you're looking for is that to form and to take out a previously known buy primary. Actually, it should be drawn a little bit more over here, something like that. And as it takes out that primary range, that buy primary, this becomes transitional. Okay, this is your takeaway for today. Because as this becomes transitional, you've got, remember, primary ranges hold price. So what's happening here is a sell primary has taken out a buy primary. Massive, okay? Massive thing to have happened in the market space. If that's happening on a higher time frame, you can bet your bottom dollar it's going to go in that direction, whichever way it is. And if it's happening on a lower time frame, you can get an entry, right? So as it comes back down here, now you've got an option, an opportunity. And what you're looking for is proof, them to take some liquidity, right? And then it's this entry here, A, B, and that's where you would enter. Profit target, you pick it. But that's the whole key here is this buy primary, sell primary, the transitional order block, and then allow them to prove it. Okay, that's what I wanted to impart today. That's my process. Hope you enjoyed it. Good luck trading. Hope everything's going amazing for everyone. And I'll catch you on the next one. Peace out.